Hey there, folks. Today I'm diving into what's expected from this week's Consumer Price Inflation Report and what it could mean for the Fed's next move on interest rates. Let's start with the basics. The July Consumer Price Index, or CPI, is due out on Wednesday. Economists are forecasting that annual inflation will hold steady at 3.0%, the same as in June. Now, for the core CPI, which excludes the volatile food and energy costs, it's expected to tick down slightly to 3.2% from 3.3% in June, still stubbornly above the Fed's target of 2%. So what's driving these numbers? Easing costs for cars, airfare, and housing are helping to slow inflation. But auto insurance costs? Yeah, they're still climbing. Federal Reserve officials have made it clear. They need to see consistent signs that inflation is under control before they consider cutting interest rates. And with the next policy meeting in mid-September, everyone's watching this report closely, but not everyone at the Fed is convinced. Federal Reserve Governor Michelle Bowman recently expressed her skepticism, stating she still sees inflation as somewhat elevated with some upside risks. She emphasized the need to pay close attention to price stability while also monitoring the labor market. Her comments indicate that a rate cut at the next FOMC meeting isn't a done deal. Deutsche Bank research echoed this, saying the upcoming inflation data will be crucial in determining whether the Fed gains the confidence to signal a rate cut. 2 weeks ago, the Fed opted to leave the Fed funds rate unchanged at its current 23-year high. Chair Jerome Powell mentioned a possibility of a September rate cut, but stressed the need for more data showing the economy is moving in the right direction. Priscilla Thiagamorthy, a senior economist at BMO Capital Markets, noted that more well-behaved inflation data in August or a higher jobless rate might be necessary to convince the FOMC that inflation is moving convincingly toward the 2.0% target. In summary, the July CPI report is shaping up to be a significant indicator for the Fed. If inflation continues to moderate, it could pave the way for a rate cut in September. But as always, it's a waiting game. Thanks for tuning in. Make sure to hit that like button and subscribe for more updates on economic trends and policies. Catch you next time.